Hey everyone, welcome back to Upside Down Data. Today I'm happy to have Jay from Daily Crypto Analysis back on the channel, and also, of course, joined by the other half of Upside Down Data, Joe. Welcome to the discussion, guys. Happy to have you here. I'm going to be taking the kind of MC role this time around, so I have a couple questions. So we're going to start off kind of meat and potatoes here. You know, the market's been doing some interesting things. We kind of had Bitcoin rallying up into the upper 40Ks. Everyone got, or a number of people got quite excited with that, but then we kind of seemed to get rejected and we moved back down to around the 40K level. So to start off, I just want to ask all of you, both of you, what are you making of this price action? How are you seeing it? What are some things that you're looking at? Jay, why don't we start with you?
Yeah, so I think it was pretty pretty much determined that we were going to get bounced off that level where we did at around 47, 48K. So I've been posting some things lately talking about where the number of coins are being held at, as I think that's a pretty important metric that, a lot of people that are performing price technical analysis are trying to estimate where the supply of the Bitcoin is being held. And I reference Bitcoin because ultimately Bitcoin is a proxy for the entire crypto market. If Bitcoin's doing well, everything's going to do well, and vice versa. So if Bitcoin is coming into a major resistance level, in my opinion, you're often going to see the entire market, especially in a more bearish segment of the market, sort of reject off of wherever it's at as well, along with Bitcoin. So we saw that Bitcoin was coming up to, 45, 46, 47K. And there's where it started getting, it started slowing down. And I think that makes a lot of sense because if you look, there are simply a large number of coins being held right in that 46 up to around 48, 49K level, all the way up to around 50K. So anytime you're coming into that level, and this will include going into the future, you're going to encounter resistance at that level. Not to mention the fact that a lot of the holders in that zone are shorter term holders. So you have a large number of short term holders sitting in a very narrow range, and they are going to act as a resistance level, especially when you consider the fact that a lot of those people were underwater on their trade significantly. So you're giving them in a bearish market an opportunity to get out of a massively losing trade. So, we were down into the 30s. So a lot of these people had acquired back in January thinking, the standard buy the dip type thought process. And now they get a chance to get out of the trade, maybe not back at their cost basis, but very near it. And quite frankly, I think they're going to take that. And when you don't have an exuberant retail market backing it up, you're going to get stuffed at that level. And I think that's precisely what we saw. And then, I posted, in addition to that, several days before when we were sitting at 43K, you heard a lot of people saying, well, we need to hold this 43K level. There was no way we were holding 43K. There's no coins there. There are absolutely no coins sitting at 43K. It's a void. So, we when we look at the on-chain data, we could see from 39 up to around 42K or 41K really. That's where a massive quantity of long-term holders sit. So it was expected that we were going to find support at around 39 to 40K and not in fact up at 43K. So, based on everything we're seeing in the general market, I feel like, exactly what's happening right now is to be expected. And I'm expecting more potential downside pressure from here. I know it may sound like I'm bearish, and quite frankly, I am bearish in the short term, long term bullish still, but I think there's a lot of headwinds that we're coming under right now. So that's kind of my general thought process about the market and where we stand at the moment.
Yeah, that makes sense. Joe, what are your thoughts?
I'm looking at this as an uptrend still, but that's compatible, I think, with everything that you just said, Jay. There's a
Yeah, I
long
agree.
way down for this uptrend to remain intact. So if we treat the price action that we're seeing right now as, further movement through this long-term upward sloping channel that we've been in for a year now, almost exactly, then then it's just kind of more of the same. The bottom of that channel, that upward sloping trend line right now, if we were to go straight down there, it would take us to 35K. So if we were to break through this 39K support that you were talking about, that would be a key thing that I would be watching for. And as long as that held, it could be a bad time to get there. Alts especially could get really hammered if we were to make another wave down from 39, 40K to 35K. But I think that the macro picture would remain unchanged. Where it would really start to, where new questions would arise, and I would have to kind of scrap that analysis or at least reconsider it, would be if we broke through 35K and went back down, especially if the 33K level broke, and then we would be in a confirmed downtrend on the short term as well. I think that's when the picture could change. Some people are calling for that. There's some people who are calling for, have been for a long time, still calling for 25K, even 20K. Who knows what's going to happen? We'll cross that bridge when we come to it. But I'm just trying to keep things simple and zoom out and just kind of roll with the punches in the short term. If we go up, that's cool. If we go down, as long as it's not breaking through that 35K level, I think that it would, my expectations for the long term wouldn't change at all, or even for the medium term, I would say. So I'm just trying to take it level by level. Really don't know what's going to happen. I still think that this is, likely to be a consolidation period between bull market impulses. It's just that we really have no way of guessing. Even if you accept that premise, there's really no way to anticipate how long that is going to take. It might be that we're going to get another impulse wave up into the six figures, but it's not going to happen until 2024, maybe. Who knows? So I think that the way to survive and the way to have an okay time through this phase is to watch the macro levels and to be patient. So that's how I'm thinking about it. What about you, Mark?
Yeah, no, I think all those things make sense. And the only thing I would add is I think Jay, you mentioned this a little bit with the short-term holder cost basis. And one of the reasons why I was thinking also that was going to be a tough show to get past. One of the things that was interesting is during that rally, I think a lot of people were targeting the low 50Ks as the place where that was going to peter out for different reasons. But one of the things we know about how psychologically how people interact with cost bases is that people experience kind of the most variance when they're right around their cost bases. So I'd actually put out a video recently on prospect theory, which is all about this idea that when people are at kind of that break-even point, that's where any move to the upside or a gain or to the downside in loss is going to actually be experienced more dramatically than when you're super far into loss or super far into gains.
Right.
The same increment increase or decrease doesn't actually feel that important. So as people are rising into their cost basis, especially after enduring so much pain in kind of the recent months, it kind of made a lot of sense. A lot of people might be looking for the exit. And I think that's one of those things, kind of like you both were saying, that we kind of need that next impulse that can really push things beyond those cost bases. So even if people might feel tempted, if things move past the cost basis fast enough, then those increases from there are going to be felt less than kind of everything right around the cost basis there. So I think that short-term holder cost basis is likely to continue to provide resistance until we can really shift the paradigm to some degree in the price action. But
just
I think
to chime in real quick, that the video that you're referring to, just in case anyone wants to go see it, was called "How People Misvalue Gains and Losses." Was that right?
Yes. Yeah.
And there will be a link to that in the description below.
Indeed.
Yes, we will.
Of course. Yeah. But I think that's a good transition then into the next question that I had, was that since I think we're all kind of in this place where we think the market kind of needs a direction for the next kind of big thing to happen, I'm curious what catalysts you both are watching, both to the upside and to the downside, that you think might be the thing that kind of kicks the price one way or the other, that kind of breaks us out of this sideways action one way or the other. So Joe, why don't I kick it over to you for that question?
Well, I don't think that this is necessarily going to be the catalyst, but it's timely. And I think it could be a catalyst. Tax day is coming. And, some people at least, it's hard to know how influential this is, but some people are selling to free up capital to pay their bills. I think that's especially likely to happen.
I'm going to be selling to pay my taxes on my capital gains on crypto from last year. As an
There you
aside,
go.
I just got my first real tax bill ever in my life.
Congratulations.
Yeah, I'm a few Bitcoin less worthy of the world than I was prior to 2 days ago. So
This is the problem that we all want to have, right?
maybe it doesn't feel any better.
Well, there you go. That's a great illustration. You're not the only one, for sure. There's some amount of selling pressure. It's probably not the main thing that's happening. So I wouldn't want to say that everyone should position themselves for April 18th and then we're off to the races. That seems improbable, but it is one less headwind that'll be lifted pretty soon. And it's in the next few days. So it'll be interesting to see if it has any appreciable effect. One other thing, which is not a catalyst in quite the same way, but it's worth mentioning, I think, is just the DXY, the dollar. I mean, in an inflationary climate, that's especially key to watch. It's always important to watch because it's negatively correlated with risk assets like Bitcoin. But the DXY is at a resistance level right now. It's actually at the level where it consolidated right after the COVID crash. It first pumped in the middle of March 2020 up to about 103, and then pulled back right away, and then consolidated for a couple of months within a pretty tight range right around 100, which is exactly where it is right now. If you go look at the chart, it's testing those levels again. So it's a critical level for the DXY. We'll see what happens. There's definitely resistance there for the DXY, and if it pulls back, that would be bullish for Bitcoin. It would be bullish for the NASDAQ. So that's also something that could happen fairly soon, or it could, blast right through and continue to the upside. So no guarantees, but there's some important action happening on the DXY. So that's another thing. What about you guys?
Yeah. So if you look at to both, I think those are both great points, and I think those are being not discussed perhaps as much as they should be, because I think a lot of people are also going to have to pay 2021 taxes right now, and especially if they're coming from in the form of capital gains taxes. What are they going to do? They're going to likely sell crypto that they've been holding in order to pay those taxes. So either that's already priced in other words, that has already happened. Those individuals have already sold and have freed up that capital or have set it aside, or that will be that's what we're experiencing right now, where we're seeing constant sell pressure as people are freeing up capital in order to go ahead and pay those taxes. The other thing is, I think that's a great point you mentioned about the DXY. In fact, if we look at what is the worst bear market, in my opinion, that Bitcoin has ever experienced, and I don't think it was the 2018 bear market. I think it was the 2014 bear market. And coincidentally, during that time, we saw the DXY exhibit very similar behavior to what we're seeing right now, where it's sort of, going parabolic, so to speak. So it went from around 75 almost horizontally or vertically up to a price of or a value of around 100, and we're seeing a very similar type of scent right now. So I don't think that's something that we necessarily want to see, is the DXY start going to 110 and then 120. I think that you're going to be looking at a world of hurt if that continues to happen. Coincidentally, if you then go back to the stock market, when did the DXY going from around 80 up to around 120 coincided with that 2000 crash? So I think there's a lot of precedent to suggest that if this trend continues and consistently continues, and in fact like 105 or something like that, 104 is the top of that resistance level. If it goes above that and then starts taking off, you know, I think that could be the catalyst for some of the, scarier pricing scenarios we hear for the crypto market. And like, I think people are more aware at this point. If you're holding Bitcoin and a bunch of altcoins, Bitcoin's going to get hurt, and probably hurt pretty badly, if DXY, or, just people become increasingly risk off. Is basically DXY going up is another way of saying people are becoming risk off. If that continues, a lot of these altcoins, even the good ones that will probably recover in the next cycle, are going to get annihilated. And I think people need to have a healthy appreciation of that. And fortunately, I think, the people that watch our channels do sort of have, fairly high intelligence into the, or, insight into the market, and are aware of that. But I think, just being prepared for it, even if you could be aware of something and know that it may happen, but, not sort of adjust your portfolio accordingly. So I think that's just something everyone needs to make their own individual decision as to what they'll do and how they'll approach it. But I think it's definitely something that's, not out of the realm of possibility at this point, because we've broken through some of these other lower resistance levels, at 93, and then 94, and then another one at 97. And now we're sitting at 100. And things in the macro, economy aren't getting better by the day. It seems like they're getting worse with supply chain issues, et cetera, inflation and whatnot, Fed tightening. So it's kind of where I stand. I don't know. What about you, Mark?
Yeah, and I think you guys are bringing up excellent points, and certainly those are things that I'm watching as well and have been thinking about. I think the only things I'll add to this conversation, and you brought it up a little bit at the end, is I do think that when the Fed says anything, the markets seem to be reacting these days. That just whatever the Fed does, the market goes one way or the other. And so it'll be interesting to see, because I think a lot of pressure would get taken off the markets if there'd be any hint of the Fed not ending up being as hawkish as they've been trying to convince everyone that they're going to be. I think that's one of the issues too, is I think there's been some disbelief in the market to some degree that the Fed will actually end up going through with the hawkishness that they're saying they're going to do. And so that's why every time they end up doing something that's kind of in line, sometimes you'll see things dump or even more. Or if they do a 50 basis point hike, this next time around, that could also be something that scares people. But then also there's a lot of narratives coming out right now about, this idea of peak inflation, that this March print that we got of, 8.5% CPI could be kind of the top. And then kind of, since we're going to start catching up to months where inflation was already becoming elevated, we might end up getting a reduction in the CPI prints. Even though it'll be high, it won't be exceeding the prior months. Some people are arguing that that's going to give the Fed excuse to not be as hawkish as they've been saying they're going to be, which could ease pressure off the markets and let things go up. So I think that's something that's very hard to predict exactly how it's going to go out, but I certainly think that could be a definite catalyst one way or the other. And that there's just so much capital on the sideline that if it breaks bullish, then I think people could hop right back in. You saw how quickly the stock market recovered, or had that relief rally coming out of the FOMC meeting back in March. It was pretty dramatic rally. It was actually the steepest rally that the S&P 500, for example, has had in a very long time. When you go back and look at, even though it was just ended up being a dead cat bounce. Rally out of there. So that's something that I'm just thinking about. And the other thing just to throw in there as well is that if there were to be some kind of ceasefire that would be found in Ukraine in that conflict, now there's no indication right now that's going to happen, but certainly if that did happen, that could relieve some of the concerns about commodity, shortages and prices, which I think could be another, in that case, it would be an upside catalyst. But then certainly if anything happens negative there, to the downside. So those are, I think, that's the two other things that I'm watching, is what develops in those spaces, because I think that's been driving the macro narratives for so long that I think if something big happens in one of those, the markets could really react violently.
Are you endorsing? I'm curious if you guys like the analogy of the beach ball underwater that people sometimes have been using in this situation. Is that what's going on? Is Bitcoin ready, but things are holding it back?
I think I think that analogy is being applied in the wrong way. I think there's, quite frankly, these things that are happening in the economy, I think they're being artificially held underwater in other words, there's a lot of reasons to be worried about the economy right now, and they're being suppressed by artificial means. And so I think, you know, a lot of people are applying that analogy to Bitcoin, but I don't know. I think that we live in a, you know, this hopium existence on social media where, you know, anything that's negative is rejected and anything that's positive, no matter how irrational, is accepted. And I think that, you know, we're sort of ignoring a lot of the things that are going on. In fact, people that are, you know, mentioning the fact that potentially the Fed won't raise interest rates, they won't raise interest rates anymore because they don't want to crash the economy, because it's in a we're in, you know, the situation that we're in. They're not going to not raise interest rates because we have inflation under control. They've maxed out a lot of the potential measures that they can, you know, take in order to control inflation, and raising the rates is sort of their last resort. And doing so, though, however, may end up tanking the economy. So it's walking a tightrope or holding the ball underwater, but how far underneath can you take it before, you know, it comes flying out? So I don't know. I don't see, personally, I don't see what the possible catalyst is right now that's going to send the premier risk on asset into new highs. I think there's a lot of the foundation is being laid in order to do that, but I don't think that's right now. I think it's in the future, in the potentially near future, but we're talking, in my opinion, you know, a year plus down the road. We're not talking, again, these are my views on the market. That doesn't mean they're right, but I don't see it happening right now. I think after everything that's happened over, you know, 2020 into 2021, all, you know, the markets have, you know, gone to extreme levels under what ostensibly seem to be negative circumstances, with massive supply chain issues, you know, a global lockdown, a bunch of fake money being put into the markets from the Fed, who's, by the way, pulling that money out of the markets now. They're taking money off of their balance sheets. And a lot of that money that they were injecting into the markets was then, you know, people were making profits on it. And then that's when it eventually started coming over to the crypto market. And now they're pulling that money off of their balance sheets. It's why you're seeing a lot of the tech stocks pull back. Things like ARK are getting absolutely destroyed right now, ARK ETF. So I don't see where potentially that money is coming from to send cryptocurrency to these, you know, ridiculous levels that people are talking about. I don't know if you guys have contrarian opinions to that, but
Yeah, no, I think it's a well put perspective, and it's certainly the case that we're in macro conditions that Bitcoin has. I mean, especially from an inflation sense, Bitcoin's never existed. Crypto's never existed in these particular macro circumstances, and so the headwinds are very much different. And I think the way I think about the balloon underwater analogy is that, you know, if the macro conditions were kind of on average the way that they've been throughout Bitcoin's life, then I think it would be the case that Bitcoin is just ready to pop. Like, we're seeing it across all the different metrics about how, you know, Bitcoin is showing all the behavior it tends to show before massive bull runs. But obviously the problem is that in the past, every single time it's done that, we've been under different market conditions. Even in 2018, when we had that pretty big market pullback, that was a situation where the Fed reversed course pretty quickly on its rate hikes, and then risk assets, you know, recovered. Obviously, we had the COVID crash, but that's a little bit of a black swan that no one could have really seen coming. And I think really the only way that we could see those kind of massive highs in the short term is if just the market just ends up doing irrational things like it has in the past before big stock market crashes, where you'll get the yield curve inversion, you know, months ahead of time, And oftentimes the market actually rallies pretty well. The returns are pretty good in the stock market until then you hit that actual top, and then the floor falls out, and then we go in a massive crash. And so I think it's certainly possible that could happen, where something happens that gets people back into a risk on mood. We have kind of a melt up, everyone just chasing the yield while they can, and then leads into a huge crash. Not saying that's certainly not a guarantee or something I'd bet on, but I think that would be the kind of thing I would expect, because it just seems like we're at a point now where for the stock market not to correct massively, I think some kind of magical things would have to happen to some degree for us not to see a sizable correction. Because I just don't think that what we've seen right now is on the order of magnitude of what tends to happen at the end of these massive macro bull runs that last for decades. But I don't know. That's just my 2 cents.
What about you, Joe? What do you think about that? I'm curious to get your opinion.
Well, to put what you both have said together, maybe the analogy could be, it's a balloon being held underwater, but it's not just being held underwater by like a kid in a swimming pool. It's being held underwater by like a massive anchor made of steel.
Yeah, that's a good. And that's kind of what I'm saying. It's we're laying the foundation right now for what's going to come. I don't think this is something that's going to destroy crypto. I think it's something where it's just not going to. I don't think it's going to happen on these, at least in a sustainable way, on the short-term time frame. I think, but we are looking at all these institutions, which, and I use that term perhaps in a different way than it's typically referred to. There's just a lot of acceptance of the crypto market in the public, or in the mainstream consciousness now, and it's being accepted by a lot of places that you would never in the past have expected it to be acceptable. And that's because institutions will chase profits. They don't have any moral reservations. As long as the public is okay with it, they're okay with it. And so you're going to see, I think, us move towards a place where, and we're moving towards a place where, like BlackRock Capital is getting involved, JP Morgan's getting involved. All these institutions that in the past would never have touched crypto in, say, 2018 are now becoming players in the market, which is also a bad thing in some ways, because they are the ones that actually have the ability to truly manipulate the market. In fact, manipulate $1 trillion market cap markets, not like Bitcoin in 2017 or 2015, if you want to call that manipulated at various times. These are the guys that are mountain movers in terms of the financial world. They can, if they want to manipulate the market, they can do it. And I think you're seeing that with Bitcoin. I think the derivatives markets, for instance, are artificially sort of holding Bitcoin back over time, because we hit these levels and then instantly we liquidate all the longs and then we liquidate all the shorts, and we're just these big time players are just profiting off of people right in between this narrow range. They're just playing the game, bouncing them off 40 up to 45 to 47, getting their liquidations out, and then just rinse and repeat. So I think that's going to increase as we see some of these bigger institutions come into the game. So it's positive and negative, I guess.
Yeah, well, I think that makes a lot of sense. I think that's a good place for us to wrap our conversation. So I want to thank Jay again for hopping on over here to have this great conversation. And of course, thank you, Joe, for hopping on to this. This has been a lot of fun. So yeah, we'll make sure to put the. Oh yeah, for sure. All right.
What'd you say, Joe?
I said thank you too, Mark.
Oh yeah. Thanks, Mark.
Yeah,
thanks for having me.
Fun to be the MC. Sounds good. All right, sounds good. Hope everyone has a great day who's been watching.